Alrighty, guys, I want to go over a little bit of a trade recap from yesterday and kind of go over why that was a pretty A plus textbook setup, as textbook as you will see. And apologies if the voice is not going to come out the greatest today. I did break my mic yesterday, so unfortunately will not have a newer mic coming in for a few days here, so apologies in advance for that. Now, let's go over, all the craziness yesterday we had with FOMC, and then we had the Meta and Microsoft earnings. So a lot of just external catalysts were on the table yesterday to potentially provide a bit of a volatile day, and we did get one indeed. Um, so, after the FOMC, right, we ended up getting this really nice sell off, and we essentially undertook our balance range support here at 74.17, sold right through it, and headed for newer lows into the close and kept selling off by about 4:30 or so until some of the earnings started rolling in. I believe it was the Microsoft earnings that sort of propelled us a bit higher. So let's talk about the failed breakdown here. This was a macro failed breakdown setup we had at 73.25. And let's break down why I think this is actually an amazing failed breakdown to sort of study. Um, just to have as a reference of what an A plus failed breakdown looks like. So, when we examine failed breakdowns, right, there's multiple components that grade the quality filter of what makes a awesome failed breakdown turn out. And, the more quality filters we can check off, the higher likelihood chances that the failed breakdown will work and it could run up quite a bit. Now, it's not always going to be true. Sometimes you will get lower failed breakdown quality setups that run, and sometimes you'll have high quality setups that don't run. But nonetheless, it gives us something to work with and just internally to know when executing the failed breakdown what the quality meter is, so we're able to make sure that we have appropriate risk and judgment on the table. So the first thing that really provides a high quality failed breakdown, and what we got here in great abundance, was a elevator sell down. Now this is the epitome of that. We basically, from 3 p.m. to 4:30, so within an hour and a half, we sold 160 points. That in any way, shape, or form classifies as a massive elevator sell down. So that check marks our first box, which is we didn't just have something you'd have to squint at to see if it's an elevator sell down. No, it's off the get go. It's pretty easy to tell. This is quite a bit of a elevator sell down. You're getting selling happening in pretty really nice speeds, and you're heading down to the lows. Now, secondly, do we have a really significant low? Now, the significance of this low, now this was actually a macro failed breakdown. And so what makes this interesting is this was a low from June 11. So this is a low from way back. And it has, a really high significance quality to it because it is a low from quite some time. So we know it's a massively significant low. It's not just a tiny low. This is a macro failed breakdown that ultimately have had longs positioned for over a month or so now. Third thing, do we sweep it, and is it a relatively fast sweep, right? It's kind of a elastic band where you sweep it and you get back. Now in this case we only swept it by a point. However, we swept it by a point and immediately got right back above, and we got our fourth quality meter, which is momentum. So we swept it by a point, and you can see right away we started putting in some really good momentum off of this low. So you could tell that we had that, you know, elastic band being pulled. We got to the low, swept it, and boom, right away, some great momentum right there to essentially start taking us higher. And once you see that momentum come in, that's when you know, okay, I can jump in here, I can ride that momentum. And that's what we did. Now, we got some good momentum right off into the close, but really 6 p.m. when we opened back up, when ES opened back up, that was really where the momentum came in. And we essentially went from, 30 points here, 30, 40 points within the first 15 minutes of the session, and some really good momentum. And, that carried over overnight for us back into 74.17, which was the previous balance rate and support. We got back up here, and then at the open today, we were able to cleanly put a nice reclaim and get back into our previous balance range and trend up the rest of the session. So really, really key. And this is how, you get in on these short squeezes, right? These short squeezes, we really got in as close to the bottom as you can get. And now you're able to sit pretty on a runner and just let the session play out while other people may be trying to chase in long or are looking to maybe short the tops. You get to sit pretty with a runner and have the system just take care of everything. So that's really what I wanted to highlight today, was just what makes a really good high quality failed breakdown, and then the importance of running a system with a runner where you're then able to capture this entire short squeeze in your back pocket.